At any given moment, economic conditions can vary greatly across Australia's states or not at all. Each quarter, we look to assess the similarities and differences in our Coast to Coast publication. As we've detailed in many of our recent updates, the shock that Australia's state economies felt from the first COVID-19 lockdowns was immense and broad-based. New South Wales and Victoria were the worst affected, with domestic demand down around 8.5% in the quarter. However, even the least affected states, South Australia, Queensland and Western Australia, still suffered declines of around 6%. Household demand drove these outcomes. Consumption plunged 12% in the June quarter, while home building activity jolted 7% lower, the latter coming after a 12% decline over the preceding 7 quarters to March 2020. While more subdued, the deterioration in private business and public sector investment was also outsized versus history, at around 4% and 2% respectively. Very simply, the reason these falls were so large is because when COVID-19 first hit our shores, government authorities responded swiftly and with force, shutting down the economy in each state. The dynamics of a lockdown and subsequent recovery have also been on display in available partial data for the September quarter. While mobility and spending has again been hit hard in Victoria because of the second lockdown, activity in the other states bounced back sustainably, albeit with a degree of variability. This is not to say that we have seen a full recovery across the nation excluding Victoria by any means. This is most clearly apparent in the labour market data. Though June, July and August combined saw job gains of 458,000, these gains only recovered a little more than half the losses of March to May. As a result, the employed as a share of Australia's population is still more than 2 percentage points lower than its pre-COVID level. Employment in Victoria, meanwhile, is back near the lows of the first lockdown. There are 2 points to take from these observations. First, once the virus is suppressed, Victoria will bounce back. Second, these initial gains notwithstanding, full recovery will be years in the making and depend on significant support from authorities. On the first takeaway, while we expect Victoria will suffer a 4% contraction in the September quarter, this loss will be regained in the December quarter. As this takes place, the other states are expected to see growth of around 3 to 4% in the September quarter, followed by a 1.5 to 3% gain in the December quarter. On the second key point, even with these gains, GDP will be 3.5% lower than the December 19 level at December 2020. And even 12 months later, GDP will still be a percentage point below its end 2019 level, assuming our 2.5% forecast for 2021 is correct. It will not surprise you then that while we have a much lower peak unemployment rate than the RBA, near 8% versus the RBA's 10%, by end 2021 we only expect this ratio to have edged down to 7.5%. It goes without saying that uncertainty in each state is elevated and, had it not been for sustained large-scale policy support, the recovery before Australia would be much weaker. For a full view of the risks and opportunities before each of our states, see our September Coast to Coast publication. And stay tuned for Westpac Economics' take on Budget 2020-21, due to be handed down by the federal government on October 6. We'll see you next week.